Welcome to TradeNBI.com. This is John. This report is for the 28th of January here. And, well, we can continue to see we're below the 23% and above it. There was strong trade to the upside, but couldn't even reach, again, the 38% from before. And, well, from an NBI standpoint, red eclipsing and red leading below 23% is rarely a good thing. So unless magenta is able to eclipse it, now magenta is still moving, and that's where we're still getting plenty of positive buy action within that. But critically here, looking for a pivot of magenta lower would definitely signal that we are going to be heading back to the lows. Otherwise, we can continue to trade across like this. I was looking for this. The slight pivot up of orange could have been stronger than I would have suggested, even more weakness. But midterm buyers holding in here, and of course, no steel reset in this configuration still expresses weakness as well as that shakeout. But normally within this depth, usually, like we've said before, we get a bounce coming back, so it's not surprising that we're not at the bottom side of things. That's typical within those kinds of readings. From an NQ standpoint, a lot weaker. Couldn't even get above the 23%, stayed right in between it, and much cleaner with the white leading and also the red NBI taking control of that. That also expressed weakness, and you get the same pivot on the DOC. So very consistent between those markets, even though NASDAQ is significantly weaker. And of course, within that, a little bit of drawdown from gold standpoint, and some of this is that liquidation of people that were hedging within that. And again, Fed wasn't as dramatic as some might have thought, but the inflation running where it is right now still indicates that there are definitely some problems. Now, whether or not, like we saw with some of the GDP numbers and that those massive inventory pre-purchases, will that lead to a deflationary kind of construct because people will be oversupplied going into a softening setup for consumers? We'll have to see how that one plays out. That would be the only mitigation to the inflation crunch, which is something the Fed may be actually hoping for, that dampens things down a bit. Of course, oil is going to be the driver on that one. And like I promised, the euro continuing to break down, and no shock with that. And the Eurozone isn't going to improve anytime soon. Though the pressure of UK ending all of their COVID restrictions, you have Denmark now doing it. Sweden obviously has been the leader in all of this anyway and has been outside of that. Will that put pressure on more EU countries to reduce the excessive nature, given the fact that even in Italy, as much as they talk about it being a crisis, I think they're at 18% hospitalization. Hardly anything to compare to previous months or even when the pandemic was in full swing. And therein lies the problem with that oil. And whether they think they're going to be able to normalize that or even pass through some of the costs that are going to continue with this, that'll be the interesting factor and what that does to regular retail inflation. And nice recovery back from a intraday standpoint to soften just a bit there, but it's still incredible weakness. Look at that NBI white writing, that still suggests a return back towards the zero as soon as the magenta dips a little bit lower on that NBI. And from a Bitcoin standpoint, again, got up to the peak, but as soon as the market suffers weakness, it's correspondingly suffering the same. But still, I think, and critically has been used as a hedge against the gold setup, and that's been a split that I think we noticed about a year ago, that Bitcoin had been used, particularly now that it's in futures category, allows for a lot of that kind of flexibility. The one I really like, Ethereum here, beautiful with the readings built up, came up with a nice move across, and then the sell signal started here with the dark magenta, and once you had the MBI magenta here below 25, and spike up of the white. That was the signal point for it. It held on for a little bit and then capitulated all the way to the low end of that range. No shock with that. From a 50K standpoint, likewise, again, that's that breakdown of magenta below the 25. It tried to come back up, and that's what held it up for a while, but you can see the white punched above the red, and that led to the move lower that we're witnessing here. We got a nice magenta rise going on right here, and magenta being above that 10 level. That does bode well for the ES as far as the move up. You're going to have that 43.50 one right here. Resistance also happens to be right at the 50% range. So that would be the catalyst point right there that we'll be looking at. From a 5K standpoint, while we started off with a little bit of decline, they bought it all the way back in pre-market and then continued to start driving. It was very nice, a lot of volume here as we go across. But every time the weakness began, Pink Bar captured those sides very nicely. And even when we had the divergence where you had white leading, magenta stayed above, but as soon as it broke down, came back below the 50%. That one should have moved to the 0%. It fought its way back, but as soon as that white popped up there, that gave a much clearer indication that we were moving towards the 0%. And not only did we hit the 0, it just kept going from that point on, and raced a really positive day pretty quickly and went significantly negative. And then we started right here, a classic building where it was just a constant back and forth with a slow build within that, and then towards the later end of the day, we ended up with that magenta leading, and that brought it back to the plus side of the equation right here into the post market, and that is just closed. But all in all, very nice with the readings on it, super clean. I think that's bodes well for the consistency of it. We're not looking at anything erratic here, so any continued selling is literally just based off of people repositioning. And again, if rates continue to rise, I think that puts more pressure even on the market, simply because people will certainly take the yield of guaranteed treasuries over market risk, particularly in the valuations that we're looking at. So that's something to bear in mind, but allows us to be fluid, because you're going to have to be within more bear constructs, because you do get significant rallies. It's not something that you want to just, unless you're comfortable with that broader short signal, you're going to get pretty decent rallies within them. So you just have to be willing to let go of that. It's not like it was a few weeks back where you could just buy every single dip there was. Now you have to be really cognizant of what the readings are and go with that. But as always, I will continue to update you on the Skype chat and be revealing the updates to that 50K, the power mode strategies, and some of the adjustments that I've been making to those. As always, though, I will see you on the Skype chat. Trade well. We'll talk to you later.